Hello there, and welcome to The Value of Everything. I'm pleased to have a guest here with me today. He is Andrei Polgar, the producer of the YouTube channel 1 Minute Economics. Give that a search in Google or YouTube at any stage, and you'll find brilliant illustrations, movies of how economics works, and it really does definitely condense things into very good bite-sized pieces. Andre is the author of Wealth Management 2.0, and he is here today to speak of his new book, which is The Age of Anomaly. Welcome to the show.
Thank you very much for having me. And indeed, I'm on a huge campaign over this 7-day period. I'm discounting the price of my book. I'm also having a huge contest on my YouTube channel. And I'm doing this because never before, really, in my career, and I've done tons of stuff from running businesses to, YouTube or anything else, never before have I had this deep sense of one, responsibility, and two, also urgency, as I've had when writing my new book, when writing The Age of Anomaly. Because those of you who know me from 1 Minute Economics from my YouTube channel know that I kind of made a name for myself as a balanced economist who puts forth well-researched views and is not exactly the type of person to panic about this and that. So I would assert that when someone like myself starts becoming genuinely terrified of the things he envisions coming, it makes sense to at least pay attention. And in the end, this is my main mission, right? Like, I'm here to essentially generate as much awareness about my work as possible. Now, The Age of Anomaly, it's a huge book. It's 400 plus pages long, but it's kind of going to feel as if a friend is talking to you, not this arrogant economist or whatever. So if you buy it until Sunday, it's going to be as close to free as it can get. It's going to be just 99 cents. And also, once again, this week, you can head on over to 1 Minute Economics, which is my YouTube channel, where I have a contest where people can win even a Bitcoin, which is the top prize. Or if you don't win that one, there are tons of smaller ones as well, like other crypto prizes, hardware wallets, Amazon gift cards, domain plus hosting packages, and so on. So I definitely am not in it for the money, because someone who is wouldn't spend so much time writing a 400-page book just so he can sell it for a buck. What I'm in it for is, on the one hand, is this weird combination between altruism, or my desire to see people, land on their feet, but it's also a certain dose of selfishness, because so many look toward 1 minute. So many people consider me the economist guy on YouTube, that it does give me a certain sense of responsibility, and that's kind of like the selfish part of it. I don't want to be in a situation where I see that things are going to happen in the way I envisioned them, and I feel bad for not having warned people. So essentially, this is what I'm doing right now. I'm all over YouTube, I'm on podcasts as well, I'm all over the place to kind of tell anyone who cares to listen about the things that are keeping me up at night, because I do believe that the stakes are very high.
Of course. I have had the privilege to read this book, and I must say it is excellent. I've gone through all the economics books, and I do like to actually go through the historical books of like When Money Dies and other items like that. And a lot of those books are a little bit on the tricky side to just continue reading. You sort of put it down for a bit and then you pick it up. And I did actually notice that with reading this, it is like speaking to your friend. You do actually talk through each of the steps. And honestly, it's almost like you're trying to cater to my needs in this book. It's kind of funny because I do like reading about all the historic points, particularly in speculative bubbles, and you covered all of those and the emotional pins about them. Just on that area, you seem to have done a lot of research. How much hours of research did you put into that section there?
Yeah, my head would start to hurt just thinking about it, because I am passionate about these things. So in one way, it's not it's not something that I perceive as work. But yeah, I have put in tons of hours of research to kind of like give people some proper, well-articulated historic context. I started with the first recorded asset bubble, of course, the tulip mania that peaked in 1636 to 1637. And I moved on to more and more recent ones, including popular events like the dot-com bubble, the Great Recession, and even lesser known ones like the short domain mania of 2015 to 2016. And as far as that one is concerned, I'm pretty sure I'm the only economist who covered it. And I do all of these things not because I want to tell my readers, hey, you need to know your economic history because it's going to repeat itself 100%. No, history doesn't necessarily repeat itself, but it rhymes. And by properly understanding history, you're kind of getting a glimpse into who we are. You kind of get to understand what makes us tick, why we sometimes get overly euphoric and make capital allocation mistakes and all sorts of other mistakes, why we then become excessively frightened and make mistakes in that department as well. So essentially, by having a firm grasp of history, which is what I try to help my readers do, I think you're going to learn enough about human nature so as to increase the likelihood a lot that you're going to position yourself well enough to hopefully spot the next financial crisis as early on as possible. I mean, there are by no means guarantees, and in fact, the second dimension of my book is just that. Me telling people that even someone like myself who thinks about these things quite a bit, even I might end up taken by surprise by whichever black swan event triggers the next crash or something along those lines. So it makes sense to spend at least as much time and energy focusing on becoming more resilient in general, which is what I also help people do. So just like I do on my channel and in my previous book, I try to keep things logical. I try to keep things simple to understand and kind of find the right balance between giving people meaty research, like genuinely awesome data that I spent so much time gathering, but doing so in a way that doesn't make me lose audience, in a way that doesn't make people fall asleep. Like this is the number one mistake many of my peers do. They focus too much of their time, energy on trying to sound smart and end up realizing and surprised by the fact that what they're doing doesn't work. Yeah. Essentially, I'm all about what works. And, that's kind of been my main battle, finding the right balance between giving people this consistent piece of information that is the Age of Anomaly, but making it not only easy to digest, but pleasant to digest, because otherwise, I've learned this with my channel. Otherwise, you lose people, what you're doing doesn't work, man, it's all pointless.
Yep. Just on your assessment of the historical points, you do use categories, don't you? There's certain categories which are the drivers behind each one of those scenarios. Just out of interest, what do you think is the main drivers between the speculative bubble that we're in now? Say if you was going to do a revision of your book in the future, say like in 25 years from now, what do you think, if you was looking back on it, what do you think the main category points of what has driven the bubble in this phase?
Actually, my main concern about the present isn't necessarily that one bubble or another is going to crash. Like, among other things, I also trade cryptocurrencies. I'm a pretty hands-on economist, so not the type of person who is easily spooked by market crashes, volatility, and whatever, What concerns me is that I see all of these bubbles across many different sectors, and I realize that each individual bubble is only a symptom of the much bigger problem of the elephant in the room, which is the fact that society is on an unsustainable path. And eventually, that narrative change is what I'm afraid of. Because, just taking a quick step back, looking at the dot-com bubble and then the Great Recession, the narrative has been simple, right? We've had this crash, people are panicking, but don't worry, governments and central banks are here to save the day. The problem was that to save the day and kind of kick the can down the road so that it all comes crashing down when someone else is in charge and not you, by doing that, there's always a greater and greater price to pay. And after the dot-com bubble, Greenspan in the US lowered interest rates to 1% from 6.5%. It doesn't seem like a big deal now, but it was huge back then.
Yeah.
But the narrative was that the day was saved. Perfect. The problem is that there was a price, and that price was inflating an even bigger bubble, the real estate one. However, when that popped, once again, everyone was panicking, but don't worry, governments and central banks have it all under control. Except, one, the market demanded an even bigger dose of stimulus, so they had to bring interest rates down to zero and even pump money into the system to the tune of, at the height of QE, about $1 trillion per year in the US. Essentially, $1 trillion per year was pumped into the system, and from 1913 up until the Great Recession, the monetary base had only reached $850 billion. This is the kind of thing that worries me, the kind of anomaly that has become acceptable as status quo. Like people say, yeah, of course they pumped money into the system. Of course they pumped more into the system in 1 year than had accumulated in almost 100 years. And these are the various pockets of anomaly that are accumulating, which in the end, I believe, will lead to a narrative change, because of course we're going to have another market crash. And of course, as it always happens, people are going to panic, everyone's going to be afraid, and governments and central banks will most likely try to push the same narrative. Don't worry, we have it all under control. Maybe we're going to take interest rates negative, maybe we're going to pump even more money to the system. Don't worry about it. The problem is that eventually, sooner rather than later, as I try to explain in my book, the market is going to say no. The market is going to refuse this medicine that it keeps being given. And that no essentially translates to a loss of confidence that, historically speaking, tends to be something that defines a generation. Somewhat of a big reset is inevitable, in my opinion. And my main driving force behind this huge promotion campaign I'm on with the Age of Anomaly is precisely this. I know that when the big reset is going to come, and when it comes to the subsequent transfer of wealth that will inevitably take place, I know that historically speaking, the average person tends to be on the losing end of it. So, to keep it a bit simple, what worries me is not necessarily one specific bubble, but rather the elephant in the room. The moment when the narrative changes from, don't worry, something crashed, but governments and central banks are going to bail us out, to the narrative changing to, okay, who's going to bail out governments and central banks?
Very good point. So let me just give you like a kind of like a Wall Street or City of London kind of response to this argument. So let's just say 2008 happened and we survived through that crisis, and now we're in 2018, and all well and good, there may be another little financial slump, but we can always get through it. We've got through it in the past. Why shouldn't there be any difference to what happened before to what there is now? If you think about all the debt out there, we're just trying to inflate all that money out so that eventually it gets to a point that the debt is so minimal. It's just going to be a classic system of just inflating the debt, getting to a stage where the debt is minimized and the governments can continue on, and the continuation of the productive assets just continue growing, and everything's going to smooth over eventually. I think you get all these doomsdayers that say all these things, but it never quite materializes. How would you respond to that?
This is a pretty common theme, and the first thing I would get people to do is actually look at the present, because you've pointed out correctly. Here we are, over 10 years after the Great Recession started, yet look at how interest rates currently are in the United States. Let's not even talk about the European Union and Japan. I've mentioned the dot-com bubble and how they were lowered to 1%. Well, in that case, at least up until the Great Recession, they had a chance to move back up. Not to 6.5% again, but at least to 5.25%. So at least when the Great Recession hit, central banks had a safety cushion, or they had ammunition, or however you want to put it. And still, that was not enough. And as I've mentioned previously, the market demanded an even bigger dose of this economic cocaine. Well, this time, we have two problems. Interest rates, even after so much time, haven't recovered properly. 1. 2, the market is once again most likely going to want an even bigger dose. And 3, things are already so unsustainable and have been pushed to certain limits already that, of course, it's possible. Like, maybe we have another major crash and the Federal Reserve in the United States will say, don't worry about it. We will lower interest rates to negative 1% and pump $3.5 trillion into the year instead of 1. If the market accepts this, then of course, we might be good to go for another business cycle. But here's where it gets tricky, because even this thing with negative interest rates, it can only work for so long. One of my popular videos on 1 Minute Economics is the one about how the banking system works, about fractional reserve banking. And personally, I cannot think of even one bank that would survive if, let's say, 3 out of 10 people want their money back. There's just not enough to pay everyone. And that's kind of the thing with negative interest rates. Of course, if you lower them to zero, people are going to complain, but the average person is just too comfortable to take money out of the banking system and do something else with it, If you lower them a little bit to, negative 0.2% or something like that, once again, the average person is going to say, yeah, thanks a lot for taking my money, but it's probably not going to be enough to get them to move. If you lower them to negative 0.5%, then maybe you're going to have 5% of the people say, no, I'm not willing to give you that much money each and every year, so I'm going to take it out and do whatever I want with it.
Yep.
If you lower it to negative 1%, maybe you're going to have 15% of people say, wait a second, there's no way I'm giving you 1.5% of my money each and every year just for you to hold it. And this is where things get tricky, because as of a certain point, the banking system can just not survive anymore. So in theory, yeah, you can just inflate away at the monetary base. You can just pump more and more money into the system. You can just take interest rates more and more into negative territory. And of course, the old adage in the investment world that the market can stay irrational for longer than you can stay solvent, it is true in many cases, but it's not going to do so forever. So eventually, for these three reasons, something is bound to break. Now, can I be 100% certain that on that date things are going to unfold exactly in this or that manner? No. What I can tell people, however, is that, personally, I've never been on such a campaign before. I've never invested so much time and energy to kind of spread the word about these things. And I do so because at this point, I consider that there's an asymmetrical advantage to preparing for the next big reset or something along those lines. So
Yep.
if I give someone amazing fire insurance for $1 per year, that person takes it, and over that 12-month period his house doesn't burn down, it doesn't change the fact that I gave him an amazing deal on fire insurance. And this is kind of what I'm trying to get people. It's much wiser to start preparing even a year or two too early than doing it a week too late. Because if you only wake up to these things, if you only smell the coffee when everyone around you is panicking, then you can have the best economist in the world by your side, and there will be little that he can do to help you. If you prepare when nobody's panicking, on the other hand, then, as I explained in the Age of Anomaly, a few simple things can make a world of a difference. So that's kind of my value proposition to people at this point.
Because obviously this book has come together, and it must have been planned over a number of years and stuff, I'd imagine. But obviously you'd say that now that things are there's a certain air of urgency which is happening right now. But when did you actually think like the whole system ain't going to work out too well? I really need to start saying something about this. When did you start cementing your ideas and thinking this isn't going to work out too well, and then starting to think about putting the book together?
I'm the type of economist who always has his ears to the ground, because I also actively invest. I don't just write about asset classes based on stuff I've read. I also write based on my own experience. And gradually, you cannot help but notice certain trends. Like in my book, I talk about the short domain mania of 2015 to 2016. What happened then? Well, Chinese investors were desperate to take money out of the country, so essentially they did so by investing in certain domain categories, and those domains went from being worth $8 in 2009 or 2010 to being worth over $2,000 each toward the end of 2015. You notice such pockets of anomaly. You kind of tap into what's happening over in China. Then I have a lot of people whom I keep in touch with when it comes to crypto, when it comes to everything else. So essentially what I do is keep my ear to the ground and kind of find the right balance between being connected to reality and also doing my research work, because you've mentioned correctly, there's tons and tons of research behind the Age of Anomaly, stuff I've been working on for a very long time. And yeah, I have been following things very closely after the Great Recession. I've noticed how people were quick to say, okay, it's going to collapse every minute now, as you've rightfully pointed out. And I think this is also a major risk because, yeah, you had so many people who thought they could predict the future and who gave urgent advice. Like, for example, I personally know of people who bought silver at $50 in 2011 because they were afraid something was coming right away, and people told him on YouTube or everywhere else that you have to prepare, you have to do it now. Well, if such a person sold everything aside from his home and bought silver at $50 in 2011, but then had to deal with an emergency 2 years later and was forced to sell, then he protected himself, quote unquote, so well that he lost 60% of his money. And this is the kind of thing that has made a lot of people skeptical when it comes to the idea of an economist pointing out warning signals, because they're quick to assume, oh yeah, it's just another doom and gloomer who thinks the economy is going to collapse next month. Let's not just pay attention to him. Look at how much time passed and everything's okay. And this kind of, track record of failed prediction that has numbed the average person and has made them extremely skeptical when it comes to the idea of financial preparedness in general, rather than making them skeptical to the idea of gurus who think they can predict the future. This is the important distinction I want to make. This is yet another thing that adds a layer of danger to the entire mix. And yeah, it's the cumulative effect of all of these factors over a period of many years, as of the Great Recession, that make it clear that, now is, from the perspective of, yours truly as an opinion former in the world of economics, now is a right time to voice these concerns. Not tell people that I know for a fact the economy is going to crash 1 month from now. No. Tell them, look, there are more than enough reasons to start thinking about these things in a meaningful way, and here's what I think you should do.
Absolutely. And now, also, you could always, you do get these people that go, what I just did beforehand, just saying, look, nothing's happened, what's wrong with you? You're just a holder or a doom and gloomer kind of person. But say if we had like a free market monetary system, and we didn't have central banks and stuff like that, and there was a speculative bubble in an asset price, and that was allowed to drop by natural order, then we wouldn't have had this systematic boom and bust cycle over all this time. Well, it would have busted, but it would have just been a little bit more of a lower upstream of a boom and bust cycle compared to this potential major uplift that we're going through right now, with the amount of quantitative easing that's going in the system starting to be removed a bit now. But now this is going to be drawn away from the quantitative tightening that's going on, interest rates going up at the same time. And then potentially the puppet master isn't actually working in the favour of pumping the economy anymore. So that's potentially a side, would you say, that's fairly interesting and prominent in these times that we're living in?
A lot of my peers stay away from the idea of criticizing our current system too much, because they say, oh, no, you shouldn't do this, you shouldn't undermine confidence in the system needs this confidence, so just be quiet and work with the program. And the problem with this is that, unfortunately, there's a price to be paid. And I've noticed this time and time again. People don't want to swallow bitter medicine. That's the number one problem right there. And it's precisely these people who then elect politicians into office who promise them that, don't worry, you're not going to have to deal with these. And one of the points I make in this book is precisely this one, that the puppet masters, the powers that be, or whatever you want to call them, they have every incentive in the world to try to kick the can down the road for another business cycle. And those who have worked in public administration, or those who know people who have worked in public administration, can confirm that if you're someone in charge of something, whether it's a government, a central bank, or something on a smaller scale, the last thing you want is to be that guy, the guy under whom it all came crashing down. And you are willing to do anything if it means that you kick the can down the road for another cycle, and then the guy who comes after you has to deal with the problems. And this is essentially what happened, because I agree with your narrative that it would have been much, much better to just take our bitter medicine, face the problems head on, and yeah, in the long run, we would have embarked on a more sustainable path. Instead, we chose to zombify the economy, to make it dependent on stimulus, on artificially cheap money, on perpetual debt based growth, and all that. And eventually, again, of course, in an ideal situation, we can just keep, as you've mentioned earlier on in our conversation, we can just keep kicking the can down the road, inflating the money supply, and it's all going to be great, except that's not exactly in tune with what history teaches us. Because yeah, things can stay on an unsustainable path for a very, very long time. And yeah, the average voter doesn't want to think about serious stuff. The average voter just wants problems to go away. So essentially, it shouldn't surprise us that those in power end up doing just that, doing their best to sweep things under the rug for another business cycle.
Yeah.
But unfortunately, despite their best efforts, eventually something is going to break, most likely, the way it has done consistently throughout history. And when it does, all bets are off, because of course there are plans in place, like governments, central banks, institutions like the IMF. They have plans in place for various catastrophic situations. Like, for example, the IMF says, hey, if people lose confidence in the dollar and the euro and whatever, don't worry about it. We're just going to have the SDR as the world reserve currency, and it's all going to be great. Except it's extremely foolish to think that the plans you concoct now are going to just work flawlessly in an environment when people have lost confidence in the system, in you, essentially. So this is why I keep pushing the idea that embarking on a journey of financial preparedness in a way that doesn't take over your life, but just doing it in a meaningful enough way, it's something that has, it's something you don't have to spend all that much energy on at this point, but it has asymmetrically high potential rewards. So, yeah.
Yeah. Now, in your book, you actually talk about spotting financial storms, which I think is like the most essential thing, because we can go off talking about all these things that's happening in the world, but really timing is of essence. Really, if you know, doesn't really matter. Like, you can be playing with your money and putting it in this right and whatever. But if you do know, and you're hearing the news of something that's coming out, and you're ahead of the curve, it makes a whole world of difference. And then obviously, you do talk about obviously freeing up your mind, not just getting yourself all isolated and just think and listening to like the alternative media or just listening to the mainstream. You do sort of outlines a number of different tactics to the mindset to be in, just to keep your ear to the ground, studying what's happening in the newsrooms, trying not to get too carried away in one stream of thought, always trying to find a counter view. And yeah, literally picking up that newspaper and doing that, even if this isn't the kind of thing that's your type of thing, just picking up the newspaper and reading it. There may be something of significance there that could transfer into something in the future. And I've always seen things like this as like looking into economics is like playing chess on a global scale. You can see there's little chess pieces that are being moved here. China makes a move, America makes a move. That's like a kind of like big kind of thing that's going on in the news right now. But there's all these little underhand things that are going on at the same time, how prices move, how charts move. And then if you take a window at what happened in 2008, what was the main key drivers around that point of time just before the crisis happened? I think that's probably one of the most things that you need to have your sights on. What happened then? What was the fuses that set off then? And it's probably more than likely, in my opinion anyway, that those fuses are going to replicate into the next one. But yeah, just covering that area of spotting a financial storm, how would you put it?
I place a ton of value on keeping your ear to the ground. One, so being aware of what's happening, knowing how to gather information, willingly exposing yourself to information sources you agree with, but especially to information sources you do not, as painful as it may be at the beginning. So I place a ton of value in keeping your ear to the ground, one, and two, having a solid foundation of knowledge that you can use to interpret what's happening. Because essentially, those two dimensions are going to make it significantly more likely that you're going to be able to spot what's coming early on. You're going to pay attention to the warning signals. You're going to put them into proper historic context, and then make a smart, informed decision. And of course, for many people, this is very difficult. This is why in the Age of Anomaly, I don't shy away from saying things I know people don't want to hear. Like, one of my main advantages as an economist is that for me, economics is a labor of love. I don't, I do so much stuff, from trading cryptocurrencies to being involved in lots of projects that tend to be a lot better at bringing home the bacon than writing books or doing YouTube. So this dimension of my life, I do it for the deeper sense of meaning. I don't really care about the money, and this gives me the freedom to tell people not what I know they want to hear so I can be more popular, but it gives me the freedom to do the exact opposite, to tell people what I think they should know, which is what I believe thought leaders should be doing. So yeah, in my book, I address a lot of unpleasant things, like, for example, if you're a Republican, I'm going to strongly recommend that you watch CNBC. If you're a Democrat, I'm going to tell you, hey, every now and then, please tune into Fox News. The same way, if you hate a certain commentator, no. Grow accustomed to the idea of exposing yourself, even if only as an exercise that leads you to better mental elasticity. Make it a habit to expose yourself to as many viewpoints as possible, because it's this kind of flexibility that makes it possible for you to step out of your bubble and to see things in a meaningful, in a complex way. There's just no other way. It would be great if I could tell people, yeah, there's just I have this simple, perfect way to stay informed and to be better at economic thinking that doesn't require you to step out of your comfort zone. Unfortunately, I don't have that, because I don't think it works. What does work is acknowledging that you're in a bubble, acknowledging the fact that, of course, you have these deeply internalized beliefs, whether it's your, political ideology, or whether it's something religious or anything else, political or whatever for that matter. It's on you to acknowledge that you are living in a bubble, and understand that if you're serious about preparing yourself for the unpleasant ride I believe we're going to be eventually in for, there's just no other way. You have to step out. You have to see what's happening around you. You have to keep your ear to the ground and have a proper historic context and a proper knowledge base so that you understand what's happening. That way, when everyone's going to be worried, you're going to have a clear mind. When everyone's panicking, you will be lucid. When everyone's bottom selling their portfolios, you will be in a good position to go bargain hunting.
Yep.
But it's not easy. It's not easily achievable. But if you have the proper mindset, it can be done, and it can be done by pretty much anyone.
Yeah. I must admit, it's like, as I say, I think one good is, one part, obviously you can do this by studying your book as well, but just realize what happened, particularly what happened in 2008. Do you feel like 2008 we're going to get like a maybe not exactly the same, but a kind of a repeating scenario? So following the same trails of news of like interbank lending, if there's any issues between those kind of things, do you think that's quite relevant?
Initially, yes, but as of a certain point, no, and that is what keeps me up at night. You see, once again, we only once has it happened that more time passed between recessions than right now, and if another year passes, it's going to be a record. So cyclically speaking, we're kind of due or overdue a recession. Yeah. And yeah, I do believe that initially it's going to seem to rhyme with everything else that happened. And when I have conversations with people, many of them assume that since I'm, concerned about the future, I must be, for example, bearish on real estate. And I tell them, I'm not as bearish as you think. And I'm not as bearish as people expect me to do, for one simple reason. I'm not afraid of the crash. I'm afraid of what comes after the crash. Because yes, if you think you're going to, let's just stick to real estate so people understand where I'm coming from.
Yeah.
Yeah, of course, if we will probably have a deflationary crash, which will result in real estate going down in value as well. But what I'm afraid of is that what happens next eventually is that central banks and governments will lose control, will lose confidence in them, and that will lead to the price of several assets, not just real estate, precious metals as well, crypto most likely, and so on, skyrocketing in value. So this is why I'm not as bearish on real estate, for example, as people expect me to be. Do I think the prices are going to go down? Yeah. But what happens if they spiral out of control upwards after that? If you believe enough in your ability to time this, then of course the ideal play from a trading perspective would be selling before the crash, then quickly buying back in, and then riding the wave up. But most people are not going to be able to pull it off. Yeah. So that's kind of my thinking here, and the idea I'm trying to get those who are listening accustomed to. I am far more afraid of what happens next, of what this next steps will involve, rather than just the exogenous deflationary shock that's going to get people in panic mood or whatever.
Yeah, you are right. I think probably maybe even I'm a little bit fallible in the sense that, yeah, you might think about, okay, the economy sort of goes down a nosedive, then there's a deflationary on all assets, then there's a hyperinflationary bubble as well after that, and all the money that's printing that's going on is going into all these crypto assets. But then you do have to ask the question, then what? Are we going to have a financial revolution into utility tokens and crypto assets where we're going to exchange in a free market open society? Is government going to have a hand in this? I mean, maybe that's probably a little bit too much of an optimistic view. Maybe on a pessimistic side as well, you could have devastation of the productive side of the economy. So people are basically scrapping the factories down into base metals. Then you've got a severe problem on your hands because you've no longer got the productive capacity to actually produce good and raise living standards anymore. You do have to put yourself through this jungle of different scenarios that can potentially play out, and never sort of discount any of those.
Yeah, the problem is that our ability to predict what happens ends after a certain level of uncertainty, because we could just as easily, of course, transition to something more sustainable, to something more enterprise-based and whatnot, but the same way, people could do the exact opposite and flock towards authoritarian leaders, which end up building a world that's the exact opposite of the one you would have envisioned. So that's I believe why people need to pay a lot of attention to the idea of having their bases covered. Like I do believe, for example, that it's smart to start thinking about cryptocurrencies even now. Even if you haven't gotten involved earlier, if you do it now, it's quite likely that if you do it right, you're going to be happy. But once again, there are nuances here as well, because when everything crashes and banks are closing down, maybe people are losing their jobs, people are panicking, then yeah, the average person might think, okay, when there's so much uncertainty, it might make sense to invest a little bit in Bitcoin or a few strong cryptocurrencies and just do that as well. On the other hand, the average person is probably not going to say, hey, look, everything around me is crashing, so why don't I spend all my money on Dentacoin, which is a crypto coin for dentists, or something like that. So even when it comes to crypto, it's important to pay attention, because the next big reset type situation, especially since not even Bitcoin has been through a full market cycle, the next big reset situation is quite likely to generate a bit of a big divergence in the crypto space as well, in that you're going to have Bitcoin and the best of the best in terms of crypto, so just, several of the top cryptocurrencies, those are going to outperform and act as the hedge against uncertainty that they are supposed to be in the first place. But everything else, like there are 1,600 altcoins on CoinMarketCap.
Yeah.
When it comes to many of those, especially some that are, not some, most that are just glorified pump and dump schemes, Like, it's no wonder on 1 Minute Economics, one of my most popular videos is precisely one about pump and dump schemes. And things are so out of control that I have to delete comments pretty much each week on that video because I have people who are promoting their pump and dump groups on my video, which is about how bad pump and dump schemes are. So, people do need to pay attention to that as well. But I think there's tons of value in positioning yourself properly in the crypto world. It's something I'm most definitely doing, but it does need to be part of a plan that's more complex overall, because way too many people in the crypto space assume that being a one-trick pony is a smart thing to do and that crypto is going to be all they need. And this is something that I'm trying to work on with my book and tell them, no, crypto is a variable in this equation, but it's not the only one. So let's also think about stuff you can do aside from crypto.
Just one thing you did mention, I think you made a very good point to it, is the fact that the stock market research, and I know this as well, is that even say if there is that situation where the stock market crashes, but then the central banks need to increase the amount of money into the system, that money in an asset that actually is quite good for inflation is the stock market, because that can suck into all of the money expansion. It is a very good hyperinflation kind of hedge if you compared to just, say, for example, just having it in cash where you're going to lose everything. So and you do mention, and you do comparisons, historic comparisons as well, that stocks do perform on average better than most assets over the long run as well. But just one thing I wanted to add, actually, when I was reading this book, I just wanted to add this caveat. I think isn't there a lot of people that are just sitting on the sidelines with a lot of cash, thinking that moment's going to happen, so they don't go into the stock market? Do you find that's I know I hear a lot of rich people doing that kind of stuff. They just got the cash on the side and they don't want to get into the stock market first because they're waiting for it to crash and then they'll sweep up after. Have you heard of that kind of thing?
It is quite common. It is common among many of the people I'm in contact with as well. And it's kind of like a nice discrepancy between two things that actually the same person, Warren Buffett, says. Like, on the one hand, Buffett says that cash is the worst asset class of all because you know you're going to lose money through inflation. But on the other hand, the same Warren Buffett says that, money is like oxygen. And if you don't have it when you need it, believe me, you're going to notice. And yeah, it's a common thing, even among, or actually especially among high net worth individuals, to be overexposed to cash. And in my book, I do make it clear that yes, you need to be in cash and cash equivalents. You need to have exposure to them because when, panic mode is going to step in, especially if you have kind of internalized some core principles and know what to look for, then yeah, if you have cash at hand, you're going to be able to go on a shopping spree and essentially acquire desirable assets for pennies on the dollar. That's great. But you do need to pay attention not to keep too much in this asset class because, you think you're going to sit on the sidelines, but this ultimately ends up turning into a scenario in which you miss out on huge bull runs and all that. So it ties into exactly the thing I keep repeating over and over in my book. It's not an approach I'd recommend to just assume you can predict the future, pick a scenario, and prepare for just one scenario. Because if you're keeping cash on the sideline saying, no, we're going to have a crash very, very soon, and when that happens, I want to be sitting on a big pile of cash so I can buy lots of assets on, at heavily discounted prices. But you're betting the farm on just out one scenario. And in my experience as an economist and also someone who studied economic history, that's usually not a wise thing to do. So this is once again something where I differ from many of my peers in that I not only embrace my incompetence when it comes to predicting the future, I actually make that very incompetence a core pillar of my strategy. So I say to myself, look, of course I keep my eyes open, of course I think about possibilities, of course I calculate probabilities, but at the end of the day, I'm always humble enough to realize that I don't know anything for sure. And therefore, I like to have my bases covered. I like to prepare for more than just one outcome. And I feel that when it comes to those who are listening right now, this approach drastically increases the likelihood of landing on your feet under a wide range of scenarios, which is what I think the goal of most people should be, you know?
Yeah. How important? Because I think some people like in their world, okay, they look at stock markets, they look at things like cryptos, and they see it like almost. I know it's the wrong thing to say. They probably don't see it like this, but it does end up being like this. They see it as like this Nevada sort of Las Vegas casino that they're going into, where they can win big, and for a little bit of entry money, you can get this fantastic prize and all these kind of things. But the frame of mind that I think is essential to have is the risk management mind. How much do you think that's a valid perspective and frame of mind to have?
Risk management is everything. Because, let's look at things from the perspective, of I don't know, someone who, again, bought silver at $50 in 2011 and and was forced to sell 2 years later at a 60% loss. Now, that person, I feel, will end up being proven right by the market. So I do believe that eventually silver is going to be at a lot more than $50 an ounce. But there's just one problem. Due to improper risk and money management, by the time that happens, people like the previously mentioned individual are going to lose all their money. And that is, I think, perhaps the most common theme I've noticed among investors, among traders, because I do keep in touch with many of them as well. They assume wrongfully that those who lose money when trading or when investing lost money because they were wrong. And if only they would have been right, they wouldn't have lost money. No. Like, way more investors and traders than you realize are actually correct in their assumptions. They're actually correct when it comes to the direction the market's going to be heading in for this reason, for that reason. But they still end up losing money due to improper timing, due to improper management, due to improper risk management. And this is one of the main things I try to teach people in the Age of Anomaly. Know how to kind of, avoid putting yourself in that position. Know that proper risk management and money management, that's everything. It's something that sets you apart from the average individual who's just, randomly investing in a manic depressive way and then is surprised that his net worth is evaporating. Through proper, risk and money management, you essentially adopt a marathon. Sorry for the cliche, but you do end up adopting a marathon-like perspective to investing, which I believe you should be doing, These things aren't rocket science, you clear your mind, you make a list of assets. Once again, something I help people do. I go through each one at a time and tell them, okay, here's how you should decide if this asset is the right choice for you. You compile this list, then you make it a goal to eventually have exposure to all of these assets, and through proper risk and money management, you will be able to do just that. There's just one problem, of course, as always, many are not willing to put in the work. So they end up being essentially victims of the market and are surprised. I believe they shouldn't be. Like, you don't have to, I keep repeating this, you don't have to spend 10 hours each day studying, following the markets so as to make good investment decisions. But you do need to continuously spend, even if only a little bit of time and energy in this respect, and you're going to be on the right track. But without money management, without risk management, without, actually internalizing what exactly your strategy is and why you've chosen it and why you've chosen these assets and when and why you're going to be investing in them, without doing these things, you're going to be, like most people, once again, on the losing end of what I feel is going to be coming.
Yeah. No, just on that thing, because I listen to a lot of books about how like the best master traders think and stuff like that. And I remember one of the master traders always said, like, you've got to get burnt once in your life to actually have that growth, and then from that growth onwards, you've developed. And I think there was an angle I was trying to get at this point, but it's just something on the lines that if you can actually, like, I've had those experiences in the past myself. I've had a massive burn before, where literally I was cycling home and I was literally thinking, what is wrong with me? Am I such an idiot to do this kind of thing? But I think after that, it sort of rounded myself, and definitely sort of, I did take a position of saying, okay, no more leverage, no more like you can use leverage, but there you got to be very, very clever with how you use it. And then I just sort of formulated a lot more opinions from that. But now, say somebody's very new to the investment world and they're getting into it, it's almost like they need to accelerate their growth period almost. I'm not saying go out there and lose loads of money, but it's just over time. You obviously need a period of time and life experiences to get yourself into a stage and having confidence in doing things. But obviously, by reading this book, you do have an ability to condense things down. Now, you are going to get burnt, you are going to make mistakes, but there is
Yep.
an ability there. There's a tool there that can help you accelerate that. Would you agree?
Well, in the Age of Anomaly, I have a decent section dedicated to mental resilience. And among
Yes.
other things, I talk about just that, learning how to cope with financial losses, because this is where things start to break down for a lot of people. They lose money, it sets them off course, they become shocked, then they revenge trade. I did invest quite a bit of time teaching people this as well, how to cope with financial losses, how not to be, how not to freeze just because you're losing a bunch of money, how, not to revenge trade, how to, because I mean, look, if you don't accept the idea that you're going to lose money eventually, then you're in bad shape. Like, for example, I'm an entrepreneur aside from being an economist, and I have had more projects that ended up being failures than I had successful projects. But it didn't matter because I did so well with the successful ones that it became more than worth it. The same way, I have even traded crypto on leverage, and right now I actually am in a leverage position after the price has moved over $2,000 in my favor. But I've also been liquidated. I've also lost money. There's absolutely nothing wrong with that. And yeah, it's one of the things people need to learn. They need to be accustomed to the idea that eventually they're gonna lose money, that even when you lose money, you shouldn't lose your cool, and in the end, this is what helps them become balanced economic thinkers. They learn to accept that the market is what it is, reality is what it is. Sometimes you win, sometimes you lose. But by kind of having your head screwed on right and a solid, grasp on economics and all that stuff, kind of like by having this decent puzzle that works in your favor, you increase the likelihood that after drawing the line, you will be happy with the outcome. And that's the only thing. It's not about the episodic losses that inevitably occur. It's not about the fact that, yeah, you're going to be frustrated every now and then. No. The only thing that matters is that after drawing the line, you need to be happy. And if you kind of like make it a goal to build this kind of a sustainable long-term strategy for yourself, I believe that's eventually going to happen.
Absolutely. Now, Andre, you do mention about the different types of products or asset types that you are interested in. And I know we did talk about stocks, and you did mention bonds as well, and you didn't seem to be that interested in them. Could you explain why?
As someone who's involved in so many asset classes and who has done so much stuff and started so many projects, like, I don't mind taking on risk. I don't mind it at all. In fact, I'm pretty good at it. But what I do want is to be properly rewarded for the risk I take on. And when it comes to bonds, I look around me and I see how inadequately I am rewarded for the risk I take on by investing in them. So personally, I choose to say, no thanks. I'm going to pass. Like in my book, in the section about bonds, I've given quite a few historic examples of sovereign defaults and kind of did my best to explain to people that no, bonds aren't 100% foolproof, because people assume, yeah, I'm buying, sovereign bonds issued by a solid country, they have to pay me back, right? Well, no, they don't have to pay you back. Defaults have occurred throughout history, including defaults of many household names, as I explain in my book, and therefore, for me to be interested in bonds, you're going to have to do a much better job at rewarding me for the risk I take on. Because right now, I look at yields, and yeah, I'm just going to pass. Thank you,
Fair enough. And let's go on to the interesting one. Now, you do mention about one type of asset which is highly transferable. It's a trailblazing asset, and that is crypto. Now, you actually to an extent as well. You do mention about, obviously because of your side, you do look at website addresses as well. And I'd like to cover that a little bit afterwards because I've never really thought about that one before, and it's kind of interesting how you mentioned that. But let me start off by trying refuting cryptos to you. So, and then see if you can come back at me and say why I should be interested in them. So, cryptos are just basically mathematical codes, and there is no real such thing backing them other than the consensus of a network. And in theory, every currency or every money that's been backed by nothing has always derived back to their original value, which is zero. So why would people take on such a highly volatile asset, which the governments have all the power, they have all the guns, they do not want that kind of thing competing against their monetary system? Why would you just take this gigantic risk to be in such a volatile, unbacked computer code?
Let us, for the sake of our discussion, assume that you live in a country like Syria. And okay, you're an engineer, your wife is also an engineer, and you amassed a wealth that's pretty much your apartment, your car, and aside from that, you ended up buying one Bitcoin at $20,000. So at the worst possible time. Great, or actually not so great. And even to make matters worse, things deteriorate in your country so much that you have to leave. There's no other choice for your family. Well, in that case, let's take a look at what happens to your wealth. Essentially, the value of your real estate goes to zero because you have to leave it behind. The same way, you're not going to be able to take your car with you either. But when it comes to that Bitcoin that you overpaid for, it might just be that precisely that Bitcoin is going to be enough for you to be able to start a new life with your family. Even compared to something like precious metals, you can actually have access to your crypto just by remembering a few words. It's impossible, therefore, for it to be confiscated at the border. It's impossible for it to be, stolen from you while you're on a boat or on a train or on an airplane to your new destination. And therein, even leaving everything else aside, lies a ton of value that should make you think about, of course, not betting the farm on crypto, but including crypto in the arsenal of tools you have at your disposal. It's highly portable. You don't even have to have anything on your person, but it's the type of asset that's remarkably good at helping you when things go bad. Of course, however, if, for example, something people are afraid of in the domain industry, if the internet gets fragmented or we lose access to internet, then of course, in such a scenario, I would be very happy to be holding some physical precious metals in my hands as well. So by all means, never lose sight of the fact that you do have to invest in asset classes that complement each other. But just like there's room in your portfolio for stocks or precious metals, there is most definitely room for cryptocurrencies as well. But when you invest in them, you have to accept the fact that you're investing in a new asset class. And on the one hand, this is great because you have the potential of generating high returns. But on the other hand, you have to know what crypto is. You have to know that there are risks involved, like keeping your wallet safe, like choosing when to invest, what to invest in, and so on. But again, it's something you need. You kind of, especially if you're someone who's even tech savvy enough to be using a smartphone, this is arguably one of the greatest opportunities of your generation. So you do kind of owe it to yourself, even if only in the spirit of not having your grandchildren make fun of you later on. You do owe it, I think, to yourself to take this asset class seriously. How much you allocate in this direction is all up to you, but there are more than enough sound argument-based reasons for you to say that at least having some exposure makes sense.
Absolutely. Now, obviously, I'm not actually against crypto. I'm far more in favour, to be honest. And the reason why I was very interested in it was its political ramifications of obviously decentralising power, people having an opportunity to barter or trade goods in a manner which doesn't require the middleman taking their little cut of everything. And if you think about it, we live in an environment where inflation is eating away our purchasing power, and that is a fantastic opportunity. Now, you mentioned also precious metals. I've seen a lot of precious metal dealers that actually trade cryptos as well. So almost like you've got that. You mentioned about that transferability. You literally could go down to the your precious metal dealer, give them your gold and silver, turn that into Bitcoin, move to the next country, and then you can return it back. Maybe you'll get probably a little bit burnt on the exchange, but you won't be too far off, will you?
It depends on where you live. Like, for example, in the United States, I know there are tons of dealerships, but in my country, for example, if let's assume I go to Germany and buy, a bunch of physical 24 karat gold, I'm going to have a very hard time selling it. Because one, if I want to attain the full market price, I'm going to have to find the buyer myself,
Right.
which is going to be very hard to do and very time consuming. Whereas over here, and in many other countries like Romania, if you want to sell the gold that you bought quickly, you're going to have to take actually a major haircut on price. You're going to have to, in a worst case scenario type situation, you're going to even have to do it through a pawn shop. Or even when it comes to banks, we do have a few banks here that sell you physical gold, for example. But if you want to sell them back to them the next day, you're going to take a huge, huge haircut. So can it be done? Yeah, and especially the more developed the country you live in is, the easier it's going to be to do something like that. But in many, many countries, mine included, it's actually pretty difficult.
Yeah. Yeah, well, I understand in that respect, but it does actually sort of allude to the fact that you do have portable gold and silver in a way. People say, like, because obviously Bitcoin is trying to replicate all the benefits of gold plus the digital realm of transferable money on top of it, the scarcity obviously, and then the transferability as well on top of it, which I've always found fascinating, but I've always found the political side of it more interesting than the actual money side of it, even though that's done quite well. But yeah, just going back onto domain names. Now, I found that. Let me just give you my honest opinion of it, because I've looked at websites. I've done a little bit of building on websites, and I've never really. I've noticed I've tried to like buy a web name for the value of everything, and I got the .com and as well. Not the took out the and just took and left it to value of everything.com. And it cost me a little bit more, I noticed there's a lot of these little price fields, but I never really expanded my thoughts and thinking that this is a whole market and things. Could you just give a little summary to the listener as to how this could be seen as an investment?
Well, just like with everything else, when you invest, you need to know what you're getting yourself into. Now, unlike crypto, the domain industry is a bit more mature, but this comes with pros as well as cons, because the more mature an industry is, the more you're going to realize that the low-hanging fruit is gone. So when it comes to domains, of course, we might be tempted to say that, oh, the guy who bought money.com for $100 in the 90s got lucky. But actually, back then, he would have exposed himself to ridicule for spending his hard-earned money on something like a domain name. And it took quite a bit of time until the market eventually caught up with him. So kind of like with crypto, it's essentially just an asset that you have at your disposal. Now, by being an entrepreneur myself, I ended up getting in touch with people who invest in domains for a living. Like when I had development businesses, one of my top clients, who actually then flew thousands of miles to be the best man at my wedding, he was a professional domain investor. And at first, yeah, I found it pretty curious myself, but then I realized, of course, there's tons of value in having a domain like cars.com, as opposed to cars-best.horse. So, of course, there's a ton of value in that. I learned more about domain investing. I realized I was pretty good at it. This was approximately, let's say, 10 years ago. And yeah, it's an asset class that for someone like myself makes perfect sense. Of course, like I mentioned in my book, it's ultimately on you to decide if this or that asset is a good choice as far as you're concerned. And the same way, the domain industry at this point has its pros, has its cons. It's not for everyone. And you do kind of have to, as we alluded to earlier on in our conversation, do some proper risk management. But still, I personally have done very, very well investing in domains, and I do believe that it's an asset class that's worth at least being taken into consideration. Like in my book, I even talk about investing in websites, but that's more complicated. It's more of a knowledge curve. You have to learn how to run a website, how to set up a hosting account, how to do all that stuff. When it comes to domain names, it's a lot easier to do so, and yeah, for someone especially who is open to the idea of investing in cryptocurrencies, it might be good to maybe, accept the possibility that domain names are worth investing in as well. Maybe not right now, but in the proper context, you might decide that, okay, I think the risk to reward ratio of buying a couple of good domains is good enough for me to decide to allocate a certain percentage of my net worth in that direction. Just as I allude to in my book, be very careful, focus on quality, and I don't want to spend too much time on this, but guys, to keep things simple, for most people, just focus on .com.
Yeah. Well, actually, I just wanted to ask you one question about this other domain that's coming up with cryptos. I notice a lot. Is it .io? What does that mean?
Yeah, .io is like, I don't know, it's a TLD that ended up being popular among startups even before the whole crypto craze, just because I generally have no idea what the trigger point was, but yeah, I did notice that many years ago, one startup or the other started adopting .io. Then people over at Silicon Valley thought it was so cool, and before you know it, I was browsing websites like Flippa or other platforms where you can sell domains, and noticed that IO domains were fetching high amounts. And at the end of the day, do I have a clear explanation as to why tech startups tend to like .io? No, I honestly have no idea. But at the end of the day, if you want to speculate on them, that's of course perfectly fine as well. Just, yeah, that's what the market's chosen. I do respect that particular choice of the market. I haven't dabbled in .io personally myself. I did many years ago. I did invest in one domain that I did end up selling for a profit, but I do mostly focus on .com.
Yeah, maybe I was just thinking of a little nuance there, where you look at all the coin market cap, you look at all the new coins that come in, and then you just buy up all the IOs of it.
Yeah, like the IO thing among startups is actually something that occurred even before, a bit before the crypto phenomenon, and it just basically got exacerbated with crypto projects choosing .io for their domains.
That's fair enough. I think I need to ask you this question. I think it does kind of go against the grain of your book a little bit, because you are about making people independently think, but obviously you must have some kind of crypto portfolio. What is like your top 5 assets that you like the most at the moment?
Well, at this point, I am going to share with you my complete list of top 5 assets that I have exposure to.
Okay.
Number 1 is Bitcoin. Number 2 is Bitcoin. Number 3 is Bitcoin. Number 4, Bitcoin, and 5, also Bitcoin. Simply because I don't have anything against the idea of trading altcoins, but at this point, I'm heavily, at this point in the market, I am heavily biased toward Bitcoin. And especially when factoring in the fact that, things are going to go downwards in the economy and whatnot, once again, I would like to bring it to people's attention that now more than ever, you do have to focus on quality. Like, I'm not a Bitcoin maximalist in any way. I'm not saying Bitcoin is the only cryptocurrency that needs to exist, but based on the market conditions I'm seeing and based on, kind of what's happening right now, I see more than enough reasons for me to say, okay, I'm keeping it Bitcoin only. So at this point, I do no longer have any other cryptos except for Bitcoin in my portfolio, and even more so, I even occasionally trade Bitcoin on leverage. Now, once again, if you guys want to check, want to invest in altcoins as well, I have absolutely nothing against that. But just to the best of your ability, especially if you're thinking about, the sustainability of your strategy, avoid pump and dump type investing, which has worked very well for some people in the recent past, but I'm not particularly sure it's the best solution for the future. So when you do invest in altcoins, I think you're no longer going to be able to get away with making money despite doing sloppy research and just basically riding pump and dump waves. I think that like at this point in 2018 and beyond, if you want to do well when investing in altcoins, you're going to have to do a lot more, a much better job at conducting research, at looking what's under the hood when it comes to this project or that project. So that would be just, my number one advice. Don't forget about Bitcoin, and when you do invest in altcoins, do proper research and understand that, the overwhelming majority of projects are unfortunately nothing more than pump and dump schemes, and it's on you to identify the genuinely legitimate opportunities, and it's not always going to be easy to do.
Yeah, I just want to give one to you because I always give this a mention, and I think it's very relative. Now, obviously, you understand Bitcoin is theoretically anonymous, but it isn't necessarily, because you've got entrance points where there's KYC and everything else, and there is a traceable thing that can happen from there. You can trace IP addresses as well. Now, privacy coins, I think are very interesting because they do sort of hum with my sort of going back to the old days. If you think about all the crises that happened in the past, you think about the ability to have privacy, the black market. The black market was essential, especially like for the Weimar Republic and in times of those where the economy was totally stagnant. Nobody could trade with anyone. Everybody was on government handouts. Nobody wanted the money. So people turned to the black market because there was traceable thing. The spy agencies, the Gestapo can't track you down. You do have the ability to still trade fruit and veg and stuff on a marketplace. So types of coins like Monero do appeal to me in that kind of sense. And if you think about the roots of digital money, it is a really libertarian, anti-establishment kind of thing. Now, you could also throw on top of it that it is the only currency that does actually have a use case, because you got the black market, you can buy drugs with it and all those kind of things, whereby you do require that to actually use it. Whereas Bitcoin, you could argue that you don't necessarily need it, you just need US dollars. So I wouldn't discount privacy coins by any means in the way that I assess things, but you may have a contrary view to that.
Not really, no. Because when it comes to cryptos like Monero, of course, they're actually a pretty textbook example of something that puts something genuinely meaningful on the table in terms of technology. So personally, I definitely don't have anything against it. Even more so, I think, that's a compelling reason for you to say that this project puts this on the table, and for that reason, it's a meaningful investment. Sure. The same way you have other projects that put, something else in terms of technology, and you might decide to invest in those as well. The problem I have is, with the average run-of-the-mill copy-paste altcoin project that then gets shilled on the forum by marketing teams and ultimately dumped. Other than that, of course, I'm definitely all for figuring out which projects legitimately add something new to the table and investing in those. Just one small caveat when it comes to coins like Monero: do pay attention that the legislative aspect might prove to be problematic. So on the one hand, the freedom they come with is something really awesome in my opinion, but on the other hand, there's a decent likelihood that on a massive scale they might end up on the radar of legislators. So if that's something that makes you uneasy, it's a possible con that you need to be aware of. But generally speaking, yeah, projects like Monero do put something meaningful technology-wise on the table, and if you are to invest in altcoins, I am actually all for it, but do it in projects like these that actually come with something, that put something on the table rather than, pump and dump stuff.
Of course. And actually, I can make a contrary argument to that. What politician doesn't want to trade in privacy? So you could there is those kind of arguments. What corporation doesn't want to trade in privacy because they don't want their competitor to find out? So there is. I could argue to the cows come home that there is a big argument for privacy coins and a virtual version of cash out there, but for the time being, yeah, I would definitely say that we're. I mean, would you agree in this sense that we're probably going to have a little bit of a pullback of the pump and dump coins? It used to be like the rising tide brings up all ships. Do you feel like that might not happen this time round, where you're going to just get the few golden ones this time round?
Yeah, I do believe that. There was definitely tons of money to be made with, a viewpoint like the one you've mentioned earlier with the rising tide that lifts all boats. But at this point in the market and beyond, I would be very weary of, pump and dump type altcoins in general. Because, yeah, there already is, a bit of a trend developing when it comes to the market dominance of Bitcoin. And yeah, I think a proper context currently exists in the market for us to say that these types of altcoins aren't necessarily the best choice, which is actually a pretty significant factor in my decision to, at this point, of course, my strategy might and probably will change eventually, but at this point, that's to a certain degree even why I'm keeping it Bitcoin only.
Okay. Now, I do have to talk about the old classic because you do give this actually probably, I would actually almost say it probably gets the most mention in your book than anything else. It's almost quite it's quite funny how you actually keep on throwing it back in and out all the time. But your perspective of precious metals, could you give us that, please?
Definitely. I keep in touch through the nature of my occupation on YouTube. I keep in touch with people who like various asset classes. So I keep in touch with people who love precious metals. I keep in touch with people who are extremely enthusiastic about cryptos. So when it comes to the precious metals dimension, I have a very special relationship with these people because a common denominator I've noticed among them is the fact that they are in this game for all the right reasons. Like, they're not in it to buy a Lambo or become filthy rich overnight. They're in it they care about precious metals because they see them as an option of protecting their families, of having financial security. So they are in this, in my view, for all the right reasons. That's one. And two, as I've mentioned earlier on in our discussion as well, they do have solid arguments. They do have a much firmer grasp on economic reality than most people, so that's also an advantage. But the number one thing that I try through my book, through my YouTube channel to explain is that a lot of them are not very good at the timing dimension, at the money management dimension, at the risk management dimension, and even more so, they make what I consider to be the fatal mistake in the investment world of falling in love with the asset they're investing in. You're not supposed to do that. So my perspective on precious metals is that you have no excuse. There is most definitely room for them in each and every portfolio. They belong in each and every portfolio. But people, especially those who have a lot of affection toward them, they need to understand that, emotion-based decision-making and being a good investor just don't go hand in hand. So no matter, I understand why so many people love precious metals. I understand what exactly has made them desirable for so many thousands of years, but I'm in it. I write books, I teach people economics on YouTube because I want to help them make the right decisions. And the most common pattern I have seen, especially since 2011 with people who invest in precious metals, has been this, despite being in it for all the right reasons, they end up making so many mistakes, they end up losing money, and it's just so sad to see people who actually deserve to do well, like them, due to improper trading and due to improper investing strategies and whatnot, it's just so frustrating for me to think about how they're going to feel when the market does eventually prove them right, but they will have lost in the meantime so much money. So that's the nuance I have when it comes to precious metals. I absolutely love precious metals as an investment option, but if you're going to do it, then please do it right as I outline in my book.
Yeah. Now, you do mention about self-reliance, self-resilience as well. Now, I think this also coincides with what you mentioned there with precious metals. If a person had basically looked at cash flow and kept themselves as solvent as possible, I mean, obviously they would have to have the real patience of steel to survive for, I don't know, 10 years, 15 years, and then reap the rewards. But you could say, like when we talked about the puppets, they've used potentially suppression to keep prices down, manipulated for that time. You will eventually get some kind of reward from that point in which the market rebounds. But yeah, there is that element that you always say, like, I think there's intelligence tests out there. The fact that the ones who are the most patient and can, I don't know,
yeah, there are these tests out there. Yeah. With people with children to whom they give rewards in front of them, but they say, hey, if you don't take that treat and if you have patience, then I'm going to give you a bigger reward down the road. And it has been proven indeed that the children that exhibit patience and don't take that treat right away because they want to eat it, those are the ones who do better in life. So yeah, I'm familiar. It's actually very interesting, I think.
Yeah, and it does come down to a point, obviously, of either being very highly resilient, very patient in the way that you assess things, and you talk about things in insurance policy. So you go, I always like to call it as like a hedge against risk.
Yeah.
But if you talk of it as an insurance policy, person who bought precious metals, say back in 2009 at the peak, they've still got it locked up, and they're just thinking to themselves, okay, well, it's a hedge against a problem that could happen in the future, and then they just continue on with their day-to-day life. Now, in theory, you could say, well, you might be able to manage your affairs better. You could have put it in these other things. You could have put it in stock and stuff like that. But in theory, they've just bought that policy, and that's it. And they don't need to do anything about it and anything else, and they continue on with their day-to-day life. I think in that regard, they're still in a good position, would you say?
Oh, of course. Like, if you treat precious metals as an insurance policy, which is actually, what I try to teach people in the book, how to do just that, then you're in great shape. But the same way, I think the number one mistake people make when it comes to precious metals is spending all their money on an insurance policy, So if you're in the agriculture business and spend all your money insuring against a bad crop, then your business is not going to do very well. And that's kind of like the nuance I have when it comes to precious metals. But you're correct. If you are to do it right when it comes to investing in gold, silver, and so on, then you most definitely should treat them as an insurance policy, something you don't expect to shoot up overnight, something you have patience with, and so on. So I am actually pretty big on including them in your overall portfolio in precisely that manner. I invest in this to hedge against this and that uncertainty, and this is my insurance policy. I'm not touching it. I'm in a good enough financial position. Once again, a very important nuance. I'm in a good enough financial position and I'm diversified enough to not need to liquidate my precious metals. So in that kind of a framework, I definitely believe it's the best kind of scenario for people who invest in precious metals.
Yeah, and it doesn't. You don't have to have the worry of like looking at stocks and shares every day and looking how to move and phone up your brokers and all that kind of stuff. It's literally a couple of hours job really, and then they're sort of secured from a very extreme scenario that could happen in our economic world.
Oh yeah, definitely. But once again, like even when it comes to like stocks and following your portfolio and whatnot, what I try to teach people is that once you have your basics covered, once you internalize a few core principles, then you won't necessarily feel the need to spend every waking moments refreshing your charts or spending it logged into TradingView and seeing how this market or that market's going to do it. But it all boils down, in my opinion, to knowledge, because ultimately it's having proper knowledge and having confidence in these concepts that you've internalized that's going to enable you to no longer feel insecure. You're going to feel at ease with your strategy. You're not going to mind too much when eventually one of the markets you're exposed to goes into a downturn. And in the end, that's kind of my main goal with the book,
Yeah.
teaching people how to be properly financially resilient, how to be properly diversified in a way that doesn't take over their lives. Because that's what I've done with the 1 Minute Economics channel as well. Kind of give it my best to provide people the best bang for their time that I possibly can. Because if you ask people to spend too much time watching the markets or becoming better at investing or whatever, again, that's just it's never going to work. So what I do is I try to focus on things that work and on the type of strategy that everyday people can put to good use in a way that doesn't interfere with their family life, in a way that doesn't interfere with their job or business or whatever it is they have.
Sure. Now, just to round off, and I think we'll just kind of chime with your book itself. You do mention about how I see things. Now, you did mention this to a certain extent, and I do happen to agree with you as well that we are going to potentially look at basically, this is the Minsky moment when the debt becomes too unserviceable, that financial assets have to collapse because you've got a collapse in the supply of money because the debt's pretty much suffocating the money supply in itself. Now, eventually, so that's going to create a depression of assets. And would you go so far as to say that affects everything, or do you think there's going to be some more resilient assets compared to others at the deflationary point?
I think people need to be prepared for pain. Because what I've noticed among many investors who take preparedness seriously is a type of what Germans call Schadenfreude, or the idea that, oh, everything's going to burn around me, but I'm going to do well. And that's not the case in my opinion. Like, you do have to be prepared for the idea that no matter how hard you've worked on your strategy and on implementing that strategy, when things go bad, it's not going to be pretty for you either. Like, I consider myself pretty diversified. I have projects that bring in income streams. I even have small properties that I rent out for additional income. But when things go bad, I do accept the fact that my income, when it comes to many of these, is going to take a significant hit. And this is the message I'm trying to get across. Like, don't make the mistake, don't have the hubris of assuming that your strategy is so amazing that everyone else is going to be suffering, but you're going to be thriving. It is possible that you're going to get lucky enough for this to happen, but it's not likely. So people shouldn't confuse the idea of being resilient with the idea of being invincible.
Yeah. And just on that note, I was going to say that you probably might win on one side, so you may not lose so much in the deflationary cycle, but you might not win as much in the inflationary cycle. So,
Exactly. Like, the name of the game, I feel, especially when it comes to the average person, should be landing on your feet. Now, do I have some kind of a miracle solution for people where I can say, yeah, just invest in this, that, and no matter what happens, you're going to become filthy rich? No. Because as you've mentioned, it kind of, cancels some of the things you have exposure to are going to do well, some of the things you have exposure to aren't going to do as well. And in the end, which is kind of what I think people should be focusing on, in the end, if after drawing the line you come to the conclusion that you've landed on your feet, then I consider that a pretty darn successful strategy, one, and two, it's light years, and I genuinely mean light years ahead of the average individual who, in the US, for example, I think of studies like one published by Bankrate in 2015, which showed that the average household wouldn't even be able to properly keep up with a $1,000 medical expense or a $500 auto repair bill. So yeah, if you put these things into perspective and if you set realistic goals, I do believe that in the long run you're going to be happy.
Absolutely. So, just before we round off this interview, is there anything else that you'd like to mention about the book?
Well, In the book, again, I tried to give people this comprehensive from A to Z type guide. So you're going to go through economic history, then we're going to draw conclusions and find common denominators. Then we're going to talk about things that help you become better at spotting financial storms as early on as possible. And finally, of course, we're going to move on to the dimension where I talk about what you need to do to become more resilient in general. I I do hope people are going to find a ton of value in this book. If they do, of course, please spread the word, tell others about it. It can be found at pretty much all places where books are sold. You can find it on Amazon, Barnes and Noble, iBooks, which is Apple's app, and Kobo. You can just search for Age of Anomaly and you're going to be easily able to find it. And also, if you buy it, I would strongly recommend buying it this week, so the week during which this show is going to air, because from Monday until Sunday, the price has been reduced to just 99 cents, which is essentially as close to free as I'm allowed to go. And even more so, if you do buy this week, I would also highly recommend hopping over to 1 Minute Economics. You can find me on YouTube easily, or just go to youtube.com/1 Minute Economics. Check out my contest, and even if you don't win the huge prize of, 1 Bitcoin, there are many, many smaller ones you can win, or maybe, you're just gonna have fun taking part in the contest, because I do want to end this on a positive note and tell people, yeah, the stakes are high. Seriously bad things are coming, and yes, lives are going to be destroyed, and you're going to see these things all around you. But essentially, there's little to be gained by becoming depressed. There's little to be gained by, becoming a gloomer or anything along those lines. So kind of what I try to do with this book launch and with this big promo push I'm on is precisely this, to tell people, look, now is the time to think about these things. Now is the time to take decisive action. But, don't panic. Don't get depressed. In the end, if you're smart about it, it's all going to be great. And never lose sight of the fact that, you're in it to protect yourself. You're in it to protect your family. And it doesn't take rocket science to make the right decision.
No, definitely not. And just from my side, I would not be blowing smoke up your arse. It is actually a very good book. I've read it from back to front, and it's literally something. It's really weird how it's just something that I would just pick up and love to read, and go to the library or go to the bookshop and just I could happily read that and flick from page to page. It is a very readable book. It obviously it's sort of like jam and bread for me, but I can't recommend it enough in the sense that if you want to get a framework of mind that sort of is going to put you in as you put it, a far better state than 99% of the people out there who, if you spoke about literally stocks, like nobody's interested in stocks nowadays. Everything's done via super funds. Nobody's interested in that kind of stuff. So if you approach that, there is a cycle of the mind that if you tune yourself in a way, that addictive part of your mind into focusing on how to improve your life in the future, then there is massive opportunity there. And obviously that this is one part of the reason that I'm sure you're coming at this point, is the fact that in every crisis that happens, there's immense opportunity at the same time. And all for it, I really want to see this revolution in crypto, revolution in precious metals, of the silly speculators who just forgot about everything and refused to ignore profit margins, refused to ignore yield, refused to not look at any of the productive side of the economy, and just go into speculative assets like housing bubbles and everything else bubbles, and not think about the crux of the economy. Where is the scarcity? How is the movement of the pieces? How is the political aspect working? How is it all formulating? How is the 2008 crisis going to transpose into the 2018, 2019 crisis? It's a well-rounded book, and I think everybody just needs to add another string to their bow as to how to assess what we're going through, because I'm no expert. I'm not intelligent enough to know every single aspect of the world that we live in, but just to have this as uh, uh, ammunition that you can go to war with come the next crisis. I can't think of anything better to have. So, Andrei Polgar, thank you very much for being on the show. And get out there and check out The Age of Anomaly.
Thanks a ton for having me on. Thank you guys for listening. And I genuinely hope you're going to be able to extract a ton of value from our discussion today.
Thank you.